Trump just announced 25% tariffs on all cars not made in the United States. Financial Times reported Nvidia's China sales face threat from Beijing's environmental curbs. We had durable good orders come in, which raised some questions on how tariffs might affect the future demand. We have Fed members Kashkari and Goolsbee both coming out and talking about we could see lower rates into the future, but there are some uncertainties. We should kind of keep them where they are at for longer. And you can see that we have about 2 rate cuts priced in now for the remainder of the year. In today's Stock Market Brief show, we are going to dive into what matters most. We're going to look into the market conditions. We're going to talk about expected moves and ultimately answer was today's price action telling a bigger story. These episodes are brought to you by my partners and my patrons. Make sure to check out Interactive Brokers. That link is pinned in the comment below. If you do click on the link, make sure to check out their campus. The campus has all types of cool tools and resources for free, including courses. And then most of all, I have to thank my patrons for supporting this channel. This is a lot of content that I put together as frequently as I can for free, and these are the groups amongst my partners that keep this channel going. You get all types of benefits. It's $9 a month. I'm going to plan on putting a video together to really walk you through all this stuff because there is actually a lot of stuff in this service, including a whole trading tick suite with the query bot so you can pull up data within the Discord channel by typing in various commands, all kinds of cool stuff. Let's get into today's show. All right, ladies and gentlemen, so there we have it. The dollar bounced. A few videos ago, we talked about how the dollar was really kind of following the script of the prior first year of the Trump presidency. If you haven't watched the video, you can watch it. And the reason why I pointed that out was because there was correlations that were changing both from a positive and negative standpoint, where if we had the dollar bounce and it follows this path, it's going to shake some people up. And well, if you take a look over here, this is where we're at now. The dollar started bouncing, right? We put this video out a week or so ago. And if you look back over to 2017 on his first year of presidency, the bounce started right at around the same area before eventually kind of killing itself over. So amongst all this news and the narratives, what we see going on, what's happening to the 11 sectors that make up the S&P 500, consumer staples led the way and utilities. So more of a risk off type trading session. No surprise there. Technology fell flat on its face as well with consumer discretionary, both really risk on assets. In terms of consumer staples, some charts actually have been looking pretty good. First and foremost, they've been doing okay from a year-to-date standpoint. So we've been getting them to pull back a little bit. One of the names that popped up in my radar that I shared in the trade ideas section there on the Discord was Kroger, ticker symbol KR, but it's been doing good all year. And I really liked how we'd see these run-ups on some pretty decent volume, right? We pull back and then we saw a nice run-up on some more big volume over here. And we've been just consolidating, flagging out. And we kind of broke through this little pivot over here. So I figured that this could be, if you're looking to have some consumer staple exposure, this sets up for something kind of like this where you risk a little bit to potentially get 2 to 1 or maybe even more if it continues on. Now, I do want to call out energy because if you look from a year-to-date basis, right, we made a video about this one too. Energy sector has been one of these strongest performers. It's up 10% year-to-date. And that right there in itself is not good for the S&P 500, right? S&P 500 is down here. You have the relative strength line between energy and S&P 500. So when energy outperforms, when that green line is going like up, when it's pointing up, right, that means energy is outperforming S&P 500. And if you just look below us, well, what happens to the S&P 500 when line go up? Well, this line go down. You can even look at it from a sector analysis, a rotation kind of standpoint here. And typically when you start to get like turning points in the market, and this could be longer cycles or even shorter cycles because it's fractal how it works. Energy, when it's leading the way, right, it typically marking market tops and then it starts to turn over and you start to see some other sectors do rather well. Now, is this energy move going to last? Well, it may last, but I just wanted to call out here on the bullish percent chart, energy stocks are getting to that overbought condition. Now, remember, overbought can stay overbought for a while. If you just look straight up over here, it rallied for a while, but where did it come from over here? It's already ran quite a bit of ways, and it's coming into and around this 95 area for XLE being the proxy as we had just now moving into kind of that overbought condition via the RSI. What else happened if we look at the heat map? A lot of the selling came from big tech, right? So Nvidia, that news around Nvidia really drove that down. And then Tesla was down 5.58%, which, I mean, if you pull up a chart, we saw a 30% run up, 25% run up, whatever it was in like 2 trading days. So to see it pull back kind of makes sense. Now, if we actually pull up a chart of seasonality, is this matching the script to seasonality? Now, this is an update, but I mean, it's going to drop down, right? Or from the today's selling action. And S&P 500 typically right around this time, based on the last 5 years, makes a new low. And well, we're going to match the script by having a down day, but just keep in mind the context of seasonality currently is still matching. And that goes with the NDX too, right here. It's been matching the script of seasonality. So we'll see if it continues. Today's price action, right, was brought to you by Market Flow. This was basically telling you the entire day, just stand aside. It's gonna, right, when you had the red line trending higher and the green line trending lower, the entire day we were basically in convergence, which means that the S&P 500 is moving with market net flow. These are the days that if you are a trader, you're trying to buy the dip and you don't have this as a tool, this is the tool that tells you stand down or get out of the way, right? If it was more gray down here, or if SPY was flattening out, it'd tell a different story. Or if the green line was above the red line, it would tell you a different story. But this entirety of the trading session basically said, don't bother buying the dip intraday, right? So we'll see, maybe tomorrow changes it. Maybe the next day changes. If you're in the Discord, you can bring up this chart. It doesn't have convergence down here, but it'll show you the red and the green line and the price of the SPY. And that's part of one of the things in the query channel that's offered by TradyTick's bot that I have in the Discord. If you look at some of the weekly expected moves, is Nvidia doing anything outside of the normal that the market didn't prepare for? At this moment, no. It's actually still above its lower weekly expected move. How about Tesla? Yeah, Tesla's actually doing a lot better than expected. It blew through the weekly expected move. And what did it do today? It pulled right back into it. Big deal. Right? Take a look at Google. Google, what did it do? It broke outside of the expected move. It's coming back in to where? To where the market priced in its risk for the week, getting back below that 5-day moving average, which is kind of flattening out right there. And then Meta, what did Meta do? Meta got outside of its weekly implied move. Guess what? When things get heated, sometimes they come right back in. This is very common thing. This is common to see happen when you start to reach into these weekly implied moves. Let's take a look at the current market conditions. So I wanted to just point out that the S&P 500, right? This is the 2-hour chart. Where was this anchored from? This volume weighted average price, right? It was anchored from the all-time high. Where did price come into? It came into it, and then it started backing off. This was one of the scenarios that we painted on the prior video. And where are we coming down to? What's this blue line? The blue line is the month-to-date start volume weighted average price. So we broke above it. We found some resistance, and now we're pulling back in, and we're holding above it at this current moment, which is causing price to contract between these two VWAPs. So right now, we're kind of in the chop, and that's kind of really around this 5,700 to 5,800. So I'd say, yeah, I'd be fine to be bullish above 5,700. If it starts breaking below, I'd be more cautious. And if we start getting back up to 5,800, I'd be a little bit more cautious for some consolidation. That's where the gamma flip line is, and that's where another interesting level from a gamma perspective is. CTAs, right? If we look at CTA positioning, these are commodity trading advisors. They trade with momentum via, they're basically algorithms, right? So this is going on. There have been net sellers, right? As we've been seeing more volatility, as the market's been going off, they're big sellers and they are not buyers right now. As you can still see, they're just massively on the short side of this. If you look at vol control funds, this is another one. The exposure has been dropping here from basically, it's been dropping into March, right? From late February. And this is just telling us that volatility has been rising and promoting volatility control strategies to really just de-risk and sell into these equities. So in short, vol control positioning has been net sellers over here, and CTAs have been net sellers here, which is helping drive the volatility that we have been seeing in the overall markets. If you like these type of charts, let me fix that. If you like these type of charts and you want to see updates on them more so frequently than I do post on here, take a look at gammalab.io. It's only $15 a month, but you get your first month half off if you use code MSD50. It's a great service. I use it all the time. I export my gamma levels onto my TradingView charts using this. They have a news feed. You can build out a dashboard. It's cool stuff. Now, the next thing of market conditions I look at is the direction of the 5-day moving average. We have yellow now, which is just telling us price is below it, but it's still calculating up. We have Qs in yellow, and we started seeing semiconductors get hit. XBI, it's just been choppy. That's back to red. And IWM's turning red too as it's starting to flatten out over here too as well. And then DIA is holding. So a lot of chop over here overall. We'll get a little bit more tactical on the expected move section. If we take a look at the follow through days, we'll follow up on the follow through days here, looking at the S&P 500. So the low, it's still active, right? This low has not been breached. We had day 1, 2, 3. Day 4, we gave it kind of some leeway and we'll count it as a follow through day, even though that it wasn't the technical 1.25%. It was above 1%, which according to them, they still may count that with higher volume than the prior trading day. Now we just had day 9, and this would be technically considered a distribution day. You really don't want to see these follow through days, right? Cut. So even if we come down and doodle around, I mean, it's still holding up rather well. And you can see as price had a very strong move, where did we come into? We just came into the weekly implied move, right, for the S&P 500, which was in confluence with the all-time high VWAP. So this to me is actually kind of what I want to see. I want to see price pull back in, reset back up, flush some people out, come back in, put another high in or something, or lower high, higher low in, and then start to potentially then look to break out. But right now, what's it look like, right? A lot of people are going to just look at this and like, it's a bear flag, and they may be right, but we still have, I mean, a lot of time left to really just prove itself. And we're pretty far off of this low to continue to try and prove itself. Let's look at these expected moves. All right, this is the SPY. This is the looking from a pretty much a year-to-date perspective over here for 2025. And you'll see these orange lines on my screen. This is showing that each week's expected move. And what do you notice? You saw it go from 7 to 11 to 12 to 15. Okay, it was expanding, and now all of a sudden it went from 15 to 14 to 10. So now once again we're contracting, which kind of goes hand in hand with what we just said about this chart, how price action is pinching between these two VWAPs. Price is contracting after an expansion. So even the volatility here is too as well, and it's still trading well within its expected move, and we're still actually holding up from a week to date perspective. So even if we come back over here, I mean, we would be flat to slightly down on the week if we were to just come right back into obviously last week's close. And then we're right there at the month to date expected move. So we've been trading there. It's kind of been this kind of gravity point, this magnetic point here as price has been doodling around. And these levels we've got at the end of February for the beginning of March, and we've just been kind of doodling there. Okay, so let's take a look at the SPY on the 15-minute time frame. One of the scenarios that we did plan out was that, hey, we can have prices doodle around, and what I would like to see is price to come in a bit. And price came in a bit, and what we were looking for is a potential U-turn of some sort here with the month-to-date VWAP. And I wouldn't really consider this a U-turn, but maybe tomorrow, right, if we can come back in a little bit more, doodle around, and then start seeing strength back up and reclaiming this 5-day moving average, I would consider that more of a U-turn. Overall, though, if we start breaking down, I want to see this swing low volume weighted average price to continue to hold. So if we break down and come into the daily implied move, I'm not really all that interested until we start coming back and turning around. And if we don't get down there, right, I'm looking to still kind of get back above just around this area, maybe anchor on the daily VWAP. Maybe we pull up into the week to date. Okay, and that's declining. Then we get a little bit rejected, shake some people out, and then potentially start to turn up back into and around these areas. Now, if we all of a sudden just rip right up here based off of whatever, just keep in mind the levels of confluence here. Now we have the all-time high VWAP, which is the white line. Then we have the daily expected move in line with the weekly implied move. So really right now, I would just say, just be very cautious. Don't get chopped up in this environment. It's not offering up like super clear, it's going to go up, it's going to go down sort of scenarios. It's going to do both, right? Which if you don't realize that by now, that the market's going to go up and it's going to go down, well then, yeah, where have you been? Let's take a look at the Qs. Qs daily implied move can bring us down to around 40.7730, 479.18, this zone in here. The upper level can take us to and around 490 to 491 and some change. Well, you can see that we're just pinning around that month to date VWAP, which we had resistance. Once resistance is broken, it has the potential to become support. I would say that we're on it right now. So now it has to prove itself and break from those areas and see that strength. Now, if that's the case and that happens, watch the week to date VWAP because that can act as a level of resistance. Notice how it acted as support. Then when we broke down, it really saw some strong sell side activity there. Okay, if we continue to break down into tomorrow, I mean, just play it as you see, right? Because if the market doesn't like this over the night news and we just gap down into these ranges, the market might all of a sudden say, hey, and then all of a sudden rip higher. And what happens if it rips higher based off of this tariff news? That's the market telling you like, hey, maybe perhaps now that we got our closure on what's happening, there was a lot of uncertainty. Now, all of a sudden, we're more certain about what's going to be going on. Maybe that's what drives the market higher, right? Now, that's just a narrative, but price will tell you what the market wants or what the market is doing, right? Obviously, because price is not going to lie to you. If market's going higher, it's telling us that, hey, things are getting better, right? And if the market keeps selling off, it's because, well, we see uncertainty and the market doesn't like some of the stuff that is coming out. That's all I got for you on today's episode. Hope it helps out. I'll see you on the next.